Today, a dollar would get you a few tulips. But there was a time in the 1630s when a single tulip could buy you an entire house. Since the quick recovery of markets after the start of the pandemic, there's been much talk of economic bubbles and market crashes. And ever so often, the story of the Dutch Tulipmania comes up. In the 1630s, though they didn't know it yet, the Dutch Golden Age was in full swing. They'd won independence just 50 years ago from the Spanish Empire, and this new tiny low-lying republic was on their way to create an empire of their own. They were the masters of the sea, dominated global trade, and Amsterdam with its new fancy stock exchange seemed like the center of the world. With all this trade and riches flowing in, came a new society, the new merchant class. Amsterdam was brimming with wealthy, skilled merchants and traders. These hard-working, self-made burghers of the Dutch Republic had no titles or ties to aristocratic families. The answer back then, as it is today, was to show off. There was fierce competition among the newly rich to outshine each other. They filled their homes with extravagant furniture, commissioned artwork to rival those of Florence, and displayed their prosperity by living in mansions surrounded by flower gardens. Flower gardens of tulips. In the Golden Age, tulips were a symbol of success. The tulip was brought to Europe on trading vessels that sailed from the east. Because of this, it was considered an exotic flower that was also difficult to grow, since it takes around 10 years for seeds to blossom. Then, after just a few years, the flower dies. Another important point to note is that tulips only blossom during a few weeks every year, in the spring and early summer. Once a flower blooms, the tulips cannot be moved or they will die. You must wait for the flower to go back to its bulb form and retreat completely below the ground. Only then can the plant be moved and planted in a different pot. Despite these difficulties, normal tulips were in fact quite affordable. They weren't cheap, but they weren't that expensive either. The trigger to the tulip mania came in the 1630s with an outbreak of the tulip breaking virus. Of course, the people at that time had no idea about what was going on because modern plant pathology wouldn't be invented for another few centuries. Anyway, the tulip breaking virus caused select flowers to be even more beautiful by lining petals with multicolor, flame-like streaks. A tulip like this was rarer than the normal tulip, and as a result, prices for these flowers started to rise, and with them, the tulip's popularity. It wasn't long before the tulip became a nationwide sensation and the tulip mania kicked in. Okay, let's get down to the economics of the whole thing. Let's say you want to buy a tulip for 1 florin, but you can't take the flower with you because it will die. Remember, you can replant tulips only for a few weeks of the year. So, what you actually buy is a promise of a future sale of the tulip. You buy from the seller the right to move the bulb when it is ready to be moved. In the economic markets, the right to buy something for a certain price in the future is called a future. No, for reals, it's actually called a future, and there are entire futures markets built around the concept. We'll talk about it in another video in the future. Where were we? Okay, so you own the right to a future, but now you can sell your rights to someone else who is willing to pay even higher than what you already paid for. They are ready to buy it from you because they speculate that the price of tulips will continue to grow, and then they can resell their rights at a higher price. So far so good. The price of tulip futures may increase rapidly, but you still have buyers in the market. Next, the savvy Dutch traders jumped in on the game. They didn't want the tulips for their gardens. They were looking to make a quick profit from the rapidly increasing prices. Now, more and more people started buying tulip futures. The price rose exponentially. But of course, there's a limit to what people are ready to pay for anything. As soon as confidence in future profitable sales disappeared, the prices started to drop. The speculators who owned the futures tried to sell their investment in a frenzy, trying to minimize their losses, speeding up the price drop even further. Suddenly, the demand ended. Prices were pushed to staggering lows, and the bubble burst and the market crashed. Modern critics of this story believe that even at its peak, the trade in tulips was conducted almost exclusively by wealthy merchants, and any economic fallout from the bubble was very limited. However, records from the 1630s are very limited, and we may never know the actual impact it had on the Dutch economy.